Hello, my name is Matt Russell. I'm an FX Power Course instructor here at FXCM. I want to welcome everybody to the Daily FX walkthrough. Going to get started in just a moment. What I'm going to do tonight is walk through the latest technical report at DailyFX.com. So let's go ahead and pull up DailyFX.com and read the report written by John Kicklighter this evening. And we'll read briefly the synopsis on top. The Eurodollar's bullish rebound seems to have run out of steam for the time being. Resistance around 133 proves significant enough for the market to reevaluate the strength of any counter-trend moves when the dominant trend has been so prevalent for months. So let's go ahead and pull up the charts, if you give me one moment here. And the first chart that I wanted to show you, this is the yen, but the first chart is the Eurodollar. If you recall, I've been speaking about, how we should if you will, purposely try and miss the first initial phase of the corrective rally, which seems to be unfolding right now. And what I was speaking about yesterday, prices were near the high of the day yesterday. I was speaking about how we would have to redraw the fibs, and obviously the pair, went up another 150 pips or so after my report. But now we have that top in place where we can draw the fib levels. I was also mentioning the support line as well, the shorter term hourly support line. It seems prices initially bounced off that support line. So if you had that support line up, as well as the 50% fib, we can see a nice, that's about a 200 pip bounce off that support line as well as off that 50% fib. However, prices now, as the daily candle for 1031 has opened, prices have fallen beneath and closed beneath that support line. So, moving forward, what I would personally look for right now, again, as I was mentioning, we want to enter on the secondary phase of this correction. We might now wait for prices to come down to that 61.8 level, and that is at just below that 127 figure. So over the next few hours, that's the price level I would look for potential support. And we might look for something similar that occurred near that 50% line. Again, this is a short-term trade. You have to abandon your analysis very, very quickly if prices start to move against you. And that's why it's always important to have those protective stops in place. So once again, to reiterate, watch that 61.8 near the 127 figure over the next couple hours, as in my opinion and in my experience, that's the most reliable fib level. So now moving forward to the dollar-yen, as we have been focusing on this pair for the most part during my reports. And if you recall in the last report, or actually in the last few reports, I've had this simple hourly resistance line drawn, and we can see prices have, the resistance line has contained prices. The only issue here is that prices, in my opinion, didn't come close enough to this line to set up a good risk-to-reward entry. Hopefully, maybe some of you were a little impatient and jumped the gun, entered just a few pips shy of that resistance line. Obviously, there were a few good entries. The one thing I would caution against here is that, in my opinion, prices seem to be coiling up, if you will, right here just beneath this resistance line. In my experience, this usually precedes some type of breakout here. So as time progresses, I'd have less and less confidence in this resistance line. But again, I would still have that slight bearish bias in regards to the resistance line until we have at least an hourly close above it. So that's something we can look for moving forward. Again, my name is Matt Russell. I'm an FX Power Course instructor here at FXCM. Thanks for listening.